What is lender's mortgage insurance, or LMI? First, we need to understand how lenders, like banks, think about security. Security is something the lender uses to repay the loan if the borrower can't. If the loan is for a home, the home will be the security. Lenders compare the amount of the loan to the home's value. If the borrower cannot repay, the lender will sell the home to repay the loan. If the home's value is greater than the loan, the lender will be more comfortable with the loan as there will be enough to pay it back even if the value of the home drops. This is called the loan-to-value ratio, or LVR, which is simply the loan divided by the home's value expressed as a percentage. For example, a $600,000 loan with a house valued at $800,000 has an LVR of 75%. Many lenders have chosen an 80% LVR, above which a loan becomes more risky. At 80% and above, the lender may insure its risk with a specialised insurer called a lender's mortgage insurer. The lender passes the cost of this insurance, the LMI, onto the borrower. Not all lenders require LMI for loans above an 80% LVR, but those that don't usually charge higher interest rates for the higher risk. The cost of the LMI is a once-off cost which is not repaid even when the LVR drops below 80% as the loan is repaid. It can be very expensive. Even if you are slightly over 80% LVR, you may have to pay the LMI. This is where BOP Finance comes in. If your parents or relatives can lend you enough to get the LVR below 80%, you may not have to pay LMI. That's a huge saving. Let's do an example. Let's say your new home is valued at $800,000. Don't forget the costs. An $800,000 home can cost over $40,000 in stamp duty alone. Add in legal and other costs and it could be $50,000 in all. With a deposit of $150,000, you need to borrow $700,000 and the LVR is 87.5%. The LMI costs approximately $12,500 and has to be added to the deposit or the loan, meaning more to pay up front or over time. If we can add a family loan for $70,000, the LVR drops to 79% and you may not need an LMI, which saves the $12,500 cost. That's nearly 20% of the family loan. We hope this helps to explain LMI. Whether you have a new arrangement or you want to document an existing one, visit BOP Finance and learn more about how to make your financial arrangements safer.